Hi there. There is someone who asked me an interesting question. Safaricom is making billions of shillings in profits. How comes sometimes their stock or share at the Nairobi Securities Exchange sees the price go down? It decreases in price. Why is that the case? According to them, they thought once the company is making billions of shillings in revenue, in profit, also the share prices need to continue increasing. That is not the reality in the market. And in this video, I want to discuss with you three key things for you to understand the stock market and also understand peculiarities of Safaricom. I'm going to share with you the dynamics around the stock market, okay? What moves the share prices? What doesn't move the share prices? And then secondly, I'm going to share with you something which happened recently that did make Safaricom share to have some uncertainty too in the market. And then lastly, I'm going to talk about what is going to happen in the next 2 weeks, which is also causing some uncertainty, thus seeing the up and down movement on the share price of Safaricom. Watch the whole of this video for you to really gain a deep understanding how the forces of supply and demand at the market and other parameters do dictate the price of any share, and also understand how some fundamentals beyond the stock market also impact on the price of a stock or share. You are all much welcomed to my channel. My name is Afagza Sifunam. I am a finance expert and qualified accountant. In case you really like the videos I'm making about making money and investing, kindly consider subscribing to this channel. Down below there is a button called subscribe. Click that button to subscribe and join my channel so that you don't miss out on any of the videos which I'm making, because I make amazing and insightful videos which are going to assist you gain knowledge when it comes to investing and making money each and every day. And while you still at it, drop a like on this video. Thank you for subscribing and also liking this video. As a starting point, let me shed a little light for you to understand what moves the prices of shares or stocks at the security exchange or stock market. Prices of shares and the respective movements are not determined by the company. It is the investors who have invested in the stocks of these companies who determine. Simply put, yes, the company can determine to some extent or influenced based on their fundamentals, but the action by the investors reflects investors' confidence or reaction to the security or stock of a particular company. And that is why, for example, when there is maybe negative news that hits the market, maybe investors will go to panic mode and they're going to jump at disposing of those shares of a given company in the hope that they don't incur losses. And if they do that, think about a scenario where there are very many people who want to sell and very few who want to buy. What happens? Okay? If I use just an example of where you are, assuming you want to buy sugar, okay? And there are very many people who want to sell sugar, but only you want to buy. What is going to happen? The price of sugar is going to go down because of something called selling or supply pressure. And if there's selling or supply pressure, then the suppliers or sellers will have to compromise and agree at a lesser price so as to be able to dispose that off. The same thing goes for the stock market. And if there is pressure to sell a share, basically many people are willing to sell a share and few are willing to buy, then the price of a share is going to go down. That is why you typically hear there is forces of demand and supply which dictate the price of a share in the stock market. And also the same goes for demand. If, for example, there's very good news, okay, whereby now people want to jump on purchasing a given share, there are going to be very many people who want to buy that particular share, right? And two things are most likely going to happen. That's the best way to looking at it. Many people are going to want to buy that particular share, and that is going to outrightly push the price up. Okay? And then there are those unique scenarios where, remember, in any market, yes, in volume, in number, the most people who are many in the market are what is called noise traders. Okay? There are very few informed traders and extremely few institutional investors, basically investment banks, etc., who are also investing in the stock market. And these are the ones who have big money. So in case of any possible good news or even insider information, they might purchase a good chunk of the volumes of shares or stocks in a given particular stock. And at the point of purchasing, let me say, for example, they purchase at 45 shillings, or even let me step back a bit. In case they are putting a request of demanding maybe 50,000, okay, shares of maybe Safaricom, right? And in the market, the only available shares which are available in the market at a particular point in time is 20,000. This institutional investor is going to buy all those available shares, right? And when now other people are coming into demand also, they want to buy because of maybe the good news, what is going to happen? They're going to dictate the purchase dynamics. Simply put, they can say, yes, they bought a particular share at 40 shillings, okay? They are demanding 41 shillings. At the end, it is few sellers versus many buyers. Of course, some of these buyers are going to buy at the purchase price which is being dictated. Therefore, it's going to push the price of a share up. Those are some of the dynamics whereby we see the change in price of shares at the stock market. So understand the forces of demand and supply, and also some aspects around investor behaviors are a reflection of investor sentiment in the stock market. It is sentiments which primarily drive the price up or down. It isn't the company waking up and saying, I'm going to increase the price of my share. Yes, they can do what they can to build the business. That could also impact the price of the shares, but they can wake up and say, today, I feel like my share should be trading at 10% increase in price. No. That is the first part I wanted to discuss with you for you to understand how exactly the prices of shares or stocks are determined, and also how they move, or basically volatility in the market. And then the second thing I want to discuss with you, specific to Safaricom. Guys, about 2 weeks ago, it was sometime early July, right? There was the news about the government of Kenya ceding 15% more of its stake in Safaricom to the Vodacom group through the Vodafone Kenya Limited. Simply put, the government of Kenya was owning 35%. It did cede 15% to put its ownership at 20% and increase Vodafone Kenya Limited, which is part of the Vodacom group, holding to 55%. That move came with different things happening. The move had been planned for a minute, but remember the courts in the country did put a pause to that sometime end of last year, and that was only lifted towards the end of June. All this time, there's something which is called investors' uncertainty. The market hates uncertainty. If there's uncertainty in the market, the prices of stocks become quite volatile. Any little sentiment is going to make investors jump, maybe panic, maybe fear, maybe be extremely excited. And that is what causes all these movements in the prices of shares or stocks. So that uncertainty leading to a particular move, which was actualized early July. Of course, also the investors received this in different perspectives. Maybe the government of Kenya is ceding control, maybe thinking, what is going to be the future of Safaricom, given it's being controlled by an external group of companies, which is external to Kenya, even though in Kenya, they have an entity called Vodafone Kenya Limited. That also had some mixed results, therefore causing fluctuations in the share price of Safaricom. And the biggest buster which you need to know, which is coming, this is the biggest thing in the room, okay? Which typically in those areas used to be called blockbuster. This is actually is coming, guys. In the next 2 weeks, 31st of July, Safaricom is going to hold its AGM. The uncertainty is not over yet, because that AGM is bound to make some interesting decisions. Shareholders are supposed to vote on some interesting dynamics relating to the change in ownership. Remember, with the government of Kenya selling 15% of its stake in Safaricom and cashing upwards of 200 billion from the Vodacom Group through the Vodafone Kenya Limited became the majority shareholder at 55%. And with that comes some rights. Among the rights, which part of that agreement really pushed for, and the shareholders are supposed to vote for that during the AGM, is first and foremost, it is Vodafone Kenya Limited, which is going to be nominating the CEO of Safaricom. And the CEO has to be appointed from the list of nominees done by Vodafone Kenya Limited. Simply put, how CEO of Safaricom is being had before is going to change, because now Safaricom has a change in who the majority shareholder is, which is Vodafone Kenya Limited. And then the second thing, which also did give investors some jitters as to whether the government of Kenya is still within control, is something which was there about the government of Kenya is still going to have a say as to how Safaricom expands. Remember, Safaricom is currently operating in Kenya, and also, I think it was about 2 years ago, it got entry into Ethiopia. And the government really supported Safaricom to gain traction in Ethiopia. So it's operating in Kenya and Ethiopia market across its different offers. So that particular agreement, when the government of Kenya was selling off 15% of its stake in Safaricom, also stated very well that the government of Kenya is still going to have a say with regards to Safaricom's expansion within the region. And that also, we're going to see some interesting votings happening during this AGM. That tells you for the next 2 weeks, the shares of Safaricom are still going to be experiencing market and investor uncertainty until the AGM is over. Then we're going to know maybe the shares are going to plummet and then stabilize, or are going to increase and continue increasing, depending on what is going to come out of that particular AGM. I hope you've understood very well how a company can be profitable, yes, but then again, its shares can be dipping. The two indicators can assist you make a decision as an investor, but they're not directly correlated to how they are moving, because the two indicators are impacted on by different parameters, even though the two indicators point to the health of a company at the end of the day. What do you all think about this video? I hope you've learned a thing or two, which you're going to be implementing in your investment, and you've wrapped your head around the different dynamics around stock market and also how to interpret some of the fundamentals out there. Cheers, guys. Catch up in the next video.